Of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Hey, good afternoon, everyone. Happy Hump Day, Wednesday, August 22nd. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you, 877-927-6648. Give me a call. Let's talk about this market. Breakout Investing now airs 5 days a week on TFNN from 3 to 4 Eastern. You can get my show as a podcast on iTunes if you can't listen live. And don't forget, you can listen to all TFNN programming on your smartphone. Just plug those earbuds in. Go out for a walk, do what you're going to do. Type in tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. Don't forget to check out Tiger TV on the homepage of tfnn.com. The show is carried live in Channel 1. You can look at charts live right along with me. And the show is archived on Channel 13, and TFNN Tiger TV is also viewable on your handheld device as well. Busy day of headlines in the market. Pretty impressive performance by the major averages as we head into the last hour of trading here. Right now, the Nasdaq Composite well off its intraday low of 3,053. Recently trading around 3,076. Up 0.3% now, a little better than 9 points, trading near its session high. Volume had been tracking pretty light for most of the session, about 10 to 15% lower than what we saw on Tuesday, but it's picking up the pace a little bit. Volume on the New York Stock Exchange on Tuesday below average. No surprise there, 636 million shares. Probably going to come in pretty close to that today, although it was tracking much lower than that, so volume picking up late in the session here. Nasdaq volume on Tuesday, pretty much average, 1.54 billion shares, still tracking a little bit below that level today, but again, the pace is picking up. So that's a look at the Nasdaq Composite near its session high. Let's check in on the S&P 500 here. We'll see that it, too, is near its session high, up 2 points, 0.2% to 1415. So indices responding pretty well to a rather ugly day for the market yesterday, but again, after 6 straight weekly price gains for the S&P 500, probably a little bit of consolidation can be expected here. And again, we looked at this yesterday, but let's take a look at a weekly chart of the S&P 500 here. Weekly chart, just a little longer perspective. You can see it's bumping up against its early April high here, trying to break out. Listen, breakouts, whether they're in individual stocks or the major averages, you need some volume push. You need some conviction. And, we know volume has been very, very light in the market. Still a lot of money on the sidelines, and the debate goes on about whether or not it's going to eventually come in from the sidelines. I think it will. I'm hoping it will. I think there are a lot of decent setups out there in the market, large cap tech names, including a few in my Ultimate Growth Stocks model portfolio, continue to look pretty good technically here. They may be able to do the heavy lifting. So what's it going to take for big money to come in from the sidelines? Well, maybe it's QE3. We had the Fed minutes come out today, just a little over an hour ago. At 2 o'clock Eastern, the main message from the Fed minutes, well, get ready for QE3 because committee members, there was an active discussion of QE3 at the last meeting, discussion of new large-scale asset buys. Committee members discussed whether a new program should buy more Treasury bonds or mortgage-backed securities issued by agencies like Fannie Mae and Freddie Mac. So, again, market has been pricing in something either from the Fed or from the ECB. Got a few headlines coming up. The Fed's going to be, or Bernanke's going to be speaking at Jackson Hole at the end of this month, and then their 2-day meeting is for September 12th and 13th. So once the Fed minutes came out and there was the minutes revealed some active discussion about QE and really the likelihood that we're going to get something, that's when buyers started to come back into this market. So S&P 500 and Nasdaq trading up near their highs after early weakness. We'll check in on the Dow as well here. It is still lower, but not by much. It is down 10 points to 13,193. Let's check in on the Russell 2000. We've been kind of waiting for a technical breakout for the small cap index. A nasty reversal in the Russell 2000 yesterday. There were a lot of charts that look like this, right? Early strength followed up by weakness, reversals near session lows. Of course, Apple did that yesterday. We'll check in on Apple in just a moment, but it is rallying back impressively today, not in the volume that we saw to the downside yesterday, but buyers back in Apple. So Russell 2000, nasty reversal yesterday after a breakout try over 820. Kind of a shaky technical picture here. I did not like the reversal in Apple yesterday. Let's check in on shares of Apple. Last I saw it was up about 10, 11 bucks or so. Now it's up $12.37. So pretty much recouping all of its losses from yesterday. Stock's up 1.9% now to 668.43. The volume yesterday was very, very heavy. There was an unequivocal day of institutional selling in Apple, no doubt. So it looks like the volume today is going to be lighter than what we saw yesterday. So Apple's chart still looking a little bit iffy here. My stance is that would not be surprised to see the indices pull back a little bit here after the run that has been made. A little consolidation certainly could be expected. And let's just take another look at this S&P 500. You see the 10-week moving average for the S&P 500 right now is at 1378, 1379 thereabouts. And the S&P right now at 1415. So it's got some 35 points or so to go to get down to that 10-week moving average. That seems like a legitimate support level right now for the S&P 500. Interesting quote inside the Fed minutes today, and I'll just read right from the minutes. Quote, many members judged that additional monetary accommodation would likely be warranted fairly soon unless incoming information pointed to a substantial and sustainable strengthening in the pace of the economic recovery, end quote. Certainly economic data, manufacturing data have not been that great. We had retail sales actually looking pretty good. We had housing data today that we'll get into in just a little bit. Another rally in the home builders today. So the housing market starting to show signs of life. Clearly, the Fed's main concern here is the stubbornly high unemployment and tepid job growth, and that is likely going to impede economic growth going forward. So even though economic data have generally been pretty good in recent weeks, the job situation is still problematic. Taking a look at crude oil today, up 0.4% to 97.26 a barrel after a weekly government report showed a larger than expected decline in crude supplies. The Energy Information Administration, EIA, said oil supplies declined 5.4 million barrels last week, and December gold fell $2.40, 0.2% to 1640.50 an ounce. And let's take a look at the GLD here, and the GLD in rally mode here. Nice gap up yesterday and some follow through today, and what looks like decent volume. The GLD is up 1% to 160.40. It is back above what I thought would be a resistance level here. Still hasn't retaken its 200-day line with conviction, but it is trading slightly above its 200-day moving average right now. So gold definitely getting jiggy here. There's an interesting chart in the gold space I wanted to go over. Let's check out shares of Royal Gold. This is not a gold miner. It is a company that owns interests in numerous properties, 193 properties on 6 continents, including interests in 39 gold-producing mines and 26 development stage projects. Royal Gold, very interesting technical setup here. It is up $1.90, 2.3% to 83.42. And we'll look at a weekly chart for Royal Gold and see a beautiful technical breakout here in heavy volume over a swing point of 80.97. This one still, to me, looks like it's in buying range. I am not averse to buying technical breakouts in heavy volume, but then again, I don't like to chase them when they've moved too far past a pivot point or swing point. At 83.42 and a swing point of 80.97. That still looks to be within buying range. So Royal Gold acting very well in the gold space. Outside of that, in the miners, don't see a whole lot out there that interests me. Still see a lot of miners that are far off their highs, whose technical pictures are average at best. But Royal Gold, definitely the strong price performer here, acting very well technically. U.S. dollar index at last check at 81.59, down 32 ticks, so major averages benefiting on more weakness in the dollar. Let's check in on the UUP. This is an ETF that is comprised of a bunch of long U.S. dollar contracts, really breaking down here. You see a break below its 50-day moving average earlier this month. Now it's flirting with a break below its 200-day line. Shares of UUP down 10 cents, 0.5% today to 22.40. Its 200-day moving average is at 22.35. So trying to hold the 200-day moving average here. And let's check in on the U.S. dollar index, U.S. dollar index. This chart is as of Tuesday's close. You can see a big decline for the U.S. dollar index yesterday, down almost 0.7% to 81.79. It is bleeding pretty badly again today, down to 81.59, down about 0.3%, 0.4%, something like that. Still holding well above its 200-day moving average here, but dollar is breaking through key support levels here, and technically does not look healthy at all. The yield on the 10-year note, as we finish up some general market notes here, yield on the 10-year note under some pressure today, losing some ground recently at 1.72%, has a big precipitous decline as bonds are in rally mode today, and also the 30-year yield, which had been in rally mode, just like the 10-year note. And you can see this red line here is the 200-day moving average. A resistance level turns into a ceiling, and both the yields on the 10-year note and the 30-year bond turned away at resistance here, the 200-day moving average. The yield on the 30-year bond right now around 2.82%, 2.83%, under some pressure for 4 sessions in a row. Mentioned economic data earlier today. We had existing home sales for July came in at 4.47 million units. The estimate was for 4.55, so mostly in line with expectations there. In June, that there were 4.37 million units, so it was a little better than a 2% gain sequentially. Again, mostly in line. We also had earnings from luxury home builder Toll Brothers. Let's take a look at Toll Brothers. It is having a good, solid day today, as are most home builders, for that matter. Toll Brothers up 4.5% to 33.24. The numbers here are very, very strong. Remember, Toll Brothers targets households that typically make more than $100,000 a year, so they're in they're referred to as a luxury home builder. Earnings up 44% from a year ago to 36 cents a share, well above estimates. Sales up 41% year over year to 551 million. Home deliveries up 39% to 963 units. Backlog increased 44%. Net signed contracts jumped 57%. Big numbers from Toll Brothers. We'll take a look at some other home builders in the space moving when we get back. We'll be back in a couple minutes.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. 877-927-6648. That's the number to use if you want to call, ask me a question about this market, talk some individual stocks. Feel free to do so. Talking about Toll Brothers and strong earnings from the luxury home builder before we went into the last break, and the numbers were just outstanding at Toll Brothers, and stock benefiting as a result, up 4.5% today to 33.24. Question is it buyable? And my take is that the breakout in this stock was arguably at 28.75, and this was back in late June, back in this area here where it broke out over a swing point of 28.75. Then it went through this quick consolidation here in July and partly through August, and you had another big move last week. I think it was on August 16th was another breakout here over 31.34. So to me, it's looking a little bit extended here. When the market does pull back, you probably get this at a lower price. I'd be careful about chasing Toll Brothers up here. Let's take a look at some other home builders here that arguably are still in range. Ryland Group, RYL. Trying to come out of a base here. It is trading near its session low. Kind of strange price action with sentiment so positive around the home builders today. Ryland Group up 52 cents, 2% to 26.20. Looking or keeping an eye on this name for a breakout over 27. Still about 80 cents to go to get over that swing point. And there are some sellers in the stock today. Volume pretty heavy in Ryland Group, but it is trading in the bottom half of its range. So after hitting an intraday high of 26.95, which was only 5 cents from resistance at 27, it was turned away. So this one having a hard time getting going here. Let's also check on D.R. Horton, another high-quality home builder here. D.R. Horton trading up near its session high. Much better trading day for this stock, up 4.1% to $19 a share. Watching D.R. Horton for a breakout over 19.35. So Toll Brothers probably a little bit extended here. D.R. Horton looking a little bit better. Still has not broken out yet. And also Lennar, ticker LEN. Shares of Lennar up 3.8% to 32.37, trading in the top half of its range as well, and continuing to show relative price strength here, holding pretty close to its last swing point of 31.90. So this one still appears to be, excuse me, in range as well. There's a ancillary housing play here. Let's take a look at W.W. Grainger. This is a company that distributes maintenance, repair, operating supplies to industrial customers. It is up $1.62 right now, 0.8% to $205.24 a share. Still waiting for a breakout here over a swing point right around that 210, 211 area. I think we've got a weekly chart for W.W. Grainger. But this is a stock that is clearly benefiting on the strength in the housing sector today. The swing point 211.36 for W.W. Grainger. But you can see a nice bullish cup with handle pattern taking shape here. Handle area has been forming for about 5 weeks now, and this one could be ready to move. The volume, you can see, has been very, very light in the past 5 weeks, getting lighter and lighter and lighter and lighter. So not a stock that is under meaningful accumulation here, but you know, if new money comes in from the sidelines, institutions, fund managers start putting money to work, this is a name that could possibly break out in heavy volume, so one to keep an eye on. Other economic data today, weekly jobless claims. No, excuse me, that was not today. That's coming out tomorrow. So tomorrow we're going to keep an eye out for weekly jobless claims. They're expected to come in at 365,000. The prior week, 366,000. So just a little downward drift in weekly jobless claims. Also tomorrow, new home sales data. So if you're a housing fan, you're going to get more housing data tomorrow. New home sales expected to come in at 368,000 units from 350,000 in June. And finally, to end the week, durable orders for July will be out Friday. Some merger and acquisition news today. Sunrise Senior Living. Let's check in on ticker SRZ. Sunrise Senior Living. They agreed to be purchased by Healthcare REIT, ticker HCN, for $14.50 a share. Here's a look at big gap up for Sunrise Senior Living today, up 59% to $14.23. Again, the deal values SRZ at $14.50 a share, so big move for this stock. And let's check on the acquiring company, HCN. Again, the company name here is Healthcare REIT. It is down on news that it is the acquiring company. It is down 2.7% to 58.13. Anytime a company acquires another, the acquiring company usually falls in price because investors get worried about earnings dilution and the cost of the acquisition and all that good stuff. So we'll see how that acquisition plays out. Folks, thanks very, very much for tuning in. You're listening to Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Ken Shreve with you on TFNN. Nice long segment coming up here, about, 15 minutes or so. If you want to give me a call, please do so, 877-927-6648. Let's talk about this market. And overall, not too bad a day for the major averages. Let's go ahead, Tiger TV, pull up some charts of the indices here so you see how we're faring here. About 25 minutes left to go in Wednesday's session. The Nasdaq, after early weakness, is now trading higher by close to 6 points, 0.2% to 3,073. The S&P 500 also recovering early losses here. The S&P 500, now just up a fraction, not much at all, up less than a point to 1413, and the Dow Jones Industrial Average, that has still in negative territory here, down 31 points, 0.2% to 13,173. Again, the Fed minutes came out earlier today at 2 o'clock Eastern. I was a little bit surprised. I mean, a lot of people saying, well, nothing new here. They're considering QE3, but there was very active discussion at the last meeting about QE3. The Fed minute showed an active discussion of possible new large-scale asset buys, including buying more Treasury bonds, perhaps mortgage-backed securities. But the Fed is clearly concerned here about the pace of the recovery of the U.S. economy. Again, housing data recently hasn't been too bad, but the overall employment picture in the U.S. is still a cause of concern for the Fed. Inflation not a big issue for the Fed. At this point, of course, the more quantitative easing that is introduced in the economy, there's always the risk of having that eventually stoke inflation, but the Fed not overly concerned about that right now. So next meeting, September 12th and 13th, will likely see something. The market is certainly expecting something, no doubt about that. All right, let's check in on shares of eBay. A little surprised to see eBay trading near its session low. Yes, it has been in rally mode for quite some time. eBay is a current growth holding in my Ultimate Growth Stocks model portfolio. Big gap up for the stock on strong earnings back in July here. You see, this is an example where people are always very wary, very hesitant of buying a stock when it gaps up a price. They think it's moved too far. They don't want to buy it. They think they're chasing. But if you had bought the gap up here, you'd actually be looking pretty good. When it gapped up, it traded between 43, 44 bucks a share. Now it's trading up around 47.02. It is trading near its session low after hitting an intraday high of 48.08. But more good news from eBay today. Their crown jewel is the online payments provider PayPal. Well, PayPal is going to gain access to millions of physical stores in the U.S. under an agreement with Discover Financial Services, and that is why shares of eBay initially popped on the news. PayPal will issue payment cards to about 50 million, more than 50 million active PayPal users in the U.S. next year. The cards will let PayPal users do business with merchants that already use the Discover network. So that's good news for PayPal, a fast-growing unit of eBay. Let's also check in on shares of Equinix, EQIX, data center operator. Very strong growth prospects here. Impressive day for the stock. It was down early after Stevens downgraded the data center operator to equal weight from overweight. Shares of Equinix hit an intraday low of 186.15. It is now all the way up to 192.57, up 0.8% on the day, trading near its session high. So good solid day of strength for Equinix despite a downgrade today from Stevens. And let's also check in on shares of Covidien, which is COV. Shares of Covidien, big gap down for the stock today, still holding above its 50-day moving average here. This is a key support level, but shares of Covidien down 2.5% today to 55.03. The company said a product recall will hurt its fourth quarter earnings. The company has stopped making a surgical tissue reinforcement and is a surgical tissue reinforcement product and is recalling those products already on the market after the product was linked to an abdominal injury. So shares of Covidien under some pressure today. Busy day of our earnings flow. Let's take a look at shares of Dell. DELL. Shares of Dell having a rough day today. This is technically has been a broken stock for months. People trying to play the value game, trying to catch these things on sale. Very, very difficult to do, especially when earnings visibility is poor, sales visibility is poor. A company trying to reinvent itself and branch away from PCs and moving into hardware and software and services. That's what Dell's trying to do. Very, very difficult to do, and Dell down 5.8% today to $11.62. A bad quarter with earnings down 7% to 50 cents a share. Sales were down 8% to $14.5 billion. Again, Dell just trying to get away from this PC business. Dell, of course, was a huge market winner when it was selling a lot of PCs, and then, of course, course. The PC market got saturated, and then all these companies that made their living and enjoyed their best growth when they were selling PCs, they're saying, now what? Intel, being a big chip supplier to PCs, they're having to shift their strategy and because of this weak PC market and tablet computers gaining traction. So Dell just having a rough time of it, and it'll be interesting to see what Hewlett Packard has to say after the close today, because this is a kind of a similar situation. Hewlett Packard also makes PCs. Of course, they do printers, but this is a company trying to reinvent itself too. Let's check in on shares of Hewlett Packard ahead of earnings. And we'll see that the stock is down 68 cents, underperforming the market dramatically today, down 3.4% to $19.25. Earnings at Hewlett Packard expected to come in at 98 cents a share. That would be down 11% from a year ago. Sales down 3.5% to $30.1 billion. So we'll see what Hewlett Packard has to say after their close today. There were plenty of bright spots on the earnings front in the retail sector. Let's start with Williams-Sonoma. Williams-Sonoma. Big gap up in price for the upscale home goods company. Shares of Williams-Sonoma up 12% today to $42.80. Big gap up in price. Earnings 43 cents a share, up 16% from a year ago. Sales up 7% to $874 million. Jeffrey raised its price target to $48 a share from $42. Same-store sales at Williams-Sonoma rose 7.4%. That included an 11.7% increase at its Pottery Barn stores and a 15.6% jump at its West Elm store. So Williams-Sonoma, congratulations to that company on a very solid quarter, and the stock is having a big day as a result. Also in the retail sector, a name that I've been following for a while, Chico's, CHS on the New York Stock Exchange. It is off its highs today, trading in the bottom half of its trading range, but a big gap up for Chico's, up 6.6% currently to $18.21. Chico's had a nice solid breakout over $16 a share recently, and it's a little bit extended here, so you may just want to kind of wait for a little pullback and not chase this. But earnings were up 28% here to 32 cents a share. Estimate was for 30 cents. Sales were up 16% to $641.7 million, slightly above expectations. The women's apparel retailer has 4 brands. Chico's, that's the namesake. It also has White House Black Market, Soma Intimates, and also Boston Proper. So Chico's has been a well-run retailer, a retailer that has been executing for several quarters in a row, and pretty good play in the retail space here, especially in the specialty retail. It's a fickle industry, retail, but there's always companies that are executing consistently, and I would put Chico's in that group. Let's take a look at a weekly for Chico's. See what it looks like from a different perspective, and here you can see good, powerful breakout. Stock is working on 5 straight weekly price gains. Recent breakout over 1607. So again, a little bit extended here. If you miss a technical breakout, and if you don't own Chico's yet, you probably don't want to chase it up here. But if this market pulls back, which it will at some point, you'll probably and Chico's pulls back in light volume as opposed to heavy volume. You could get another opportunity to get in here. The 10-week moving average at 1550 looks like a pretty key support level, coincides just underneath its last swing point, right around 16. And finally, in the retail space, let's take a look at American Eagle Outfitters. Another gap up in price here. Let me get this out of the way. There we go. American Eagle Outfitters. Nice breakout in heavy volume today for this specialty retailer. Up 6.7% today to 22.23. The swing point here was 21.13. So still, stock here that doesn't look like the train has fully left the station here. Probably still within range. Earnings were up 62% at American Eagle Outfitters to 21 cents a share. Sales up 11% to almost $740 million. Same-store sales up 9%. American Eagle, another retailer performing pretty well here, and its chart proves it. It is continues to show relative price strength and a nice heavy volume move for American Eagle Outfitters today. Some other names I'm looking here. Let's take a look at Drugmaker, Cubist Pharmaceuticals. No earnings from Cubist today, but it is in a bullish technical setup here. Cubist is a drug maker poised to break out here over 44.57. That's the swing point that was set a couple of weeks ago here. Stock is up 1.6% today to 44.51. So just kind of sitting on the verge of a technical breakout here. I have a weekly chart for Cubist as well. And you've noticed, if you listen to the show for any amount of time, you see I toggle back and forth between daily and weekly charts. I use both when I evaluate a stock. I'll just kind of look at a daily and see what a stock's doing, and then the weekly chart provides good perspective because I want to see where the stock has been. I want to see if there's a chance that it's in the early stages of a possible breakout here, and Cubist is definitely in that boat. You can see a base that started earlier this year, back in the early spring, and it could be poised to come out of this base here. Again, the swing point is 44.57. Well-run drug maker here. Good top line growth, sales growth, good earnings growth in recent quarters, profitable. Interesting company here. Let's also move on, take a look at ADS. This is an institutional quality name, Alliance Data Systems. Stock is setting up nicely here, and it is up 79 cents today to 136.83. This is a provider of transaction credit marketing services to the retail industry. A lot of retail stocks have been working. Not surprising to see a name like Alliance Data Systems working as well. This is another stock that could deliver a technical breakout pretty soon here. And the weekly chart for Alliance Data Systems, I'm really looking at this as a second stage base because you can see this chart that I mocked up here. It corrected last year where it took out the low of a prior base. That was served. That enough sellers got shaken out of the stock here to reset the base count. So you're looking at a first stage breakout in this area here, breakout from a first stage base, and now it is working on what is known as a base on top of a base. So this could be a second stage base breakout taking shape here. Alliance Data Systems, a good one to watch if it breaks out in heavy volume. Definitely a stock with good technicals and good fundamentals as well. Let's take a look at shares of Mellanox Technologies. This is the Israeli chip designer. They produce and make interconnect products for computing, storage, communications applications. Recent breakout over 67.20, and the stock has never looked back. It's up at $111.13 right now. Some selling pressure in the stock today, down 2.5% to 111.13. And I have a chart of Mellanox saved here too, just to show you where some short-term support levels are. This is a daily chart that plots the 10, 20, 50-day moving average here. So you see the 10 and 20-day are almost converging here, but Mellanox still holding above its 20-day moving average at 108.31, about 3 points above that. Its 50-day line is all the way down at 86.87. So this is another name that I would not chase. I would not chase up here. It is extended. It's run a lot already. Nothing worse than buying a stock too late. So even though Mellanox is well positioned for growth and is definitely a well-supported stock, I would not chase it up here. Let's take a look at Baxter International in the healthcare field. This was a cup with handle pattern that was taking shape. Now I'm not so sure a breakout's going to work here. Was watching this name for a move over $60 a share. It is healthcare names have been underperforming for a little while now. Baxter right now down 49 cents, 0.8% to 58.30. Breakout over $60, still not out of the question here, but it is underperforming today, so we'll see what the future holds for Baxter. Still technically intact, but it is down, working on 5 straight price declines here, so that has lessened the probability of an upside move. When we come back, I want to talk about the fresh market ahead of earnings next week. This stock continues to act very well. We'll do that when we come back. Breakout Investing on TFNN.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Five minutes left to go in Wednesday's session. Let's check in on the major averages here. Not a bad performance by the market at all. Had the Fed minutes come out at 2 p.m. Eastern, and after being in negative territory, indices actually turned green. Right now we're mixed. The Dow is up near its session high, but still down about 23 points to 13,181. The Nasdaq up 8 points, outperforming nicely today. That's a 0.3% gain to 3,075, and the S&P 500 up a little more than 1 point, close to 2 points actually, to 14. 14. Checking in on shares of the Fresh Market. Its earnings report got away from me, but they're going to be coming out with earnings next week, actually, August 29th. And this stock is acting very well. Of course, Whole Foods Market, WFM, is sort of the leader in the upscale grocery space, but I think the Fresh Market brings a lot to the table. This is a stock that could easily see a breakout here over $62 a share. Of course, it will be predicated on what the company has to say on August 29th, but I don't see any reason why this company will not deliver another very, very strong quarter. I'm expecting it. Earnings expected to come in at 27 cents a share, up 23% from a year ago. Sales up 19% to $308.3 million. So we'll see what the Fresh Market has to say on August 29th. This is a company that has a big presence in the Southeast, the Middle Atlantic states, a little bit in the Midwest, hardly anything out in California. I think they've got one store open out here. They've got plans to open a couple more, but California is still a good growth area for the Fresh Market. And a recent new issue. It has only been a publicly traded company for a short amount of time, and that's the goal. When you're buying growth stocks, kind of get them in the early stages of a move, not the later stages of a move. I think the Fresh Market, even though it has been an outstanding price performer in the market, this is a stock that I think still is in the early stages, a company that is still in the early stages of growth, and I think there could be more share appreciation ahead. Another name I like here in the healthcare space, another drug maker, Regeneron Pharmaceuticals. Stock is coming to life today after some recent selling. It is up 3.2% today in decent volume to 138.90. Still watching this one for an upside breakout in heavy volume over 142 a share, so I'd still want to see it prove itself a little more. Want to see meaningful signs of accumulation here, but Regeneron is an outstanding company with outstanding fundamentals as well. They are expected to turn their first annual profit this year of $2.68 a share. Next year, profit expected to come in at $4.20 a share, up 57%. So in their latest reported quarter, second quarter sales were up 182% from a year ago to $304 million. They made 90 cents a share, reversing a year ago loss of 55 cents. So Regeneron looking pretty strong here. Good technical setup. After the close today, let's take a look at an earnings report. We've got Hain Celestial Group also looking pretty good ahead of earnings here. Shares of Hain up 8 cents to 56.83. 7 up days in a row ahead of earnings. Recently climbed back above its 50-day moving average. Profit at Hain is expected to rise 29% to 45 cents a share. Sales up 25% to $365.6 million. So Hain is another interesting company. They make natural and organic food products as well as personal care products. Wouldn't be surprised to see strong numbers from Hain. Mentioned Hewlett-Packard coming out with earnings after the close. The stock is underperforming the market broadly today. Tomorrow, earnings from Salesforce.com. And that's it for today, folks. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Be sure to listen to Tom O'Brien next on TFNN. Have a great afternoon.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails.